Hello, hello, hello. Well, it sounds good. So, this is the first stream and it's a test one. But if everything is seemingly connected, I might just dive into price. So, cool. All right, all right, all right. As Matthew McConaughey said, let's do it. Um, Sweet. So we've got news today at 8:30 a.m. and we're gonna have high impact news drivers released then. Looking at the layout, I'd say price is very highly likely to finally reach for that order block mean threshold on the daily and perhaps go a little further. But that's daily. Let's go look at the hourly. See what that shows us. We have an hourly imbalance above us in here. I'm just gonna mark it out. And we can see there's a volume imbalance at the top, so we got to include that. Mhm. Let's do something deeper color. All right. Has potential. Let's just say that. Now let's drop into 15 minutes and jot down our points for 7 a.m., 8 a.m., and 9 a.m. All of these mark our pre-market range. So, and what we do from now on is we look for relative equal lows or relative equal highs on 15 minutes first, starting from 7 a.m. We don't look at anything from before that. Um, so on 15 minutes, certainly we don't really see much. So let's drop into 5 and 7 a.m. started this rally higher. We have really nice relative equal highs right here. So let's mark these out. And we're going to be looking for how the price navigates with around them really. And then we have some nice relative equal lows this way. So in the event that we have both, what we do, we wait for more information. We wait for the market to really take to the direction in either direction really, and from there onwards we would probably consider the other relative equal level that is left untouched to be more likely to be the next target, the next short-term draw on liquidity. We also have a really nice imbalance right here. And I'm not going to anticipate what's going to happen, but if I see, let's say see price drop lower, run out the relative equal lows, reprice into this inefficiency, and then show willingness to go higher, then I'd be quite more confident in relative equal highs being the target, alongside with the mean threshold on a daily order block. Until then, we're just waiting. The news are gonna drop in about 10 minutes. This is all New York time. Let's see. Let me see how the stream is running. All right. Let's see what's going on 1 minute. Okay, well, we can really just start journaling at this point, noting down details or just jotting down ideas. Um, just generally what you see and um, trying to put some positive thought into that so then it will build your pseudo experience. Anyway, so let's just say I like these relative equal highs here. So what I said here is that because it's smooth, it reminds the retail trader resistance level, and there's highly likely, going to be buy side liquidity above there, buy stops resting above it. And in the case that price moves lower first before taking those relative equal highs out, it will likely engineer even further buy side liquidity above there Because if let's say price moves lower and takes out this relative equal lows level, I'm just saying, um, then that flow towards the sell side will, that impulse will trick everyone and trap everyone who maybe hasn't reached that level of like, okay, hey, I'm gonna short. Now, when they see that, they're gonna short and they're likely to put their buy stops above here, which then will be the next target once there is a feeding frenzy right here. By feeding frenzy, I mean like a stop hunt. Same here. So, for example, now the price is moving higher, that can um, really trigger more people to buy on this breakout and set their sell stops below here. So you can inverse this idea and just put it down here. Likewise, these relative equal lows harbor sell-side liquidity which grows as price moves further away from it in the opposite direction like that. Let's do 11. So far my laptop is is standing up pretty well to this. We're what, 15 minutes in? 8 minutes? Should be good. I'll definitely check this setup maybe after 30 minutes because that would be probably a little much for my laptop. This is also something interesting. Um, I'm not gonna say anything or make any bets, but because price has just done one drive and then second drive and then the third drive, and now we're seemingly going lower. I bet if I drop into 15-second chart, there's going to be some displacement on 15 seconds below a swing low. And ideally, that basically means that the shorts are being exhausted every time the price moves higher and higher. So eventually, once there's no, or there's considerably less individuals that are positioned to um, for a profitable short position, because the algorithm has repriced higher consecutively 3 times, and then it breaks lower. That's when the smart money has finally taken the position of a profitable short, and then price starts, like the algorithm starts aggressively repricing price lower towards the relative equal lows. So let's see what happened on 15-second chart here. Again, so um, this is the first drive. This is the second drive. And then this is the third drive. Then we see price take out this swing low right here, short-term low. This is what I mean when I say that. And then now it's on the way to the relative equal lows. Again, we don't want the price to trade above this up closed green candle because this is the idea is basically it's bearish order flow, meaning that price, if we are expecting it to move lower, we don't want price to move above an up close candle, um, which otherwise acts like a bearish order block. This is what I marked here. Now there's even more liquidity being generated because there's relative equal lows. And in 2 minutes, in a minute, there's going to be news release. We'll see what happens there. There is in fact another fair value gap right here. So I think price is going to go here first. Yep, that's what happened. News released, and as we can see, it wicked right below there. Um, let's put all of these things on this timeline. And let's see what happened here. Yeah, so, and price just launched towards um, the daily mean threshold and towards the hourly imbalance. And sometimes there's going to be nothing for you to do. Like, I wouldn't even probably trade at this point because this is high impact news, and unless you know exactly what you're doing, if you're offside, you can be hurt really fast, really, and a lot, really, really painfully. This is like 50 points in a matter of minutes, and you don't want to be offside on that. As you can see, price in fact went into this fair value gap, filled it, and took off. Now, you might be wondering, what do we have left to do? Well, we're still at 8:30 a.m., just immediately after high impact news release. We still have potential volatility coming in at 9:30 a.m. New York time, which means at that time we're gonna get um, equities open. And yeah, we can just keep reading price and looking for anything like relative equal lows or relative equal highs and any other inefficiencies. Which now we have this large inefficiency right here. This huge inefficiency. I want to mark it out. I'm going to mark it out in a high color. Let me just hide these for now. Price is about to reach the consequent encroachment of this hourly fair value gap, CB, sell side imbalance, buy side inefficiency, meaning that on the hourly chart, when that imbalance happened, there was only ability for market actors to participate in the sale, and it was a very strong move. Let's say, again, if I use the same analogy of painting the wall that I really love, um, if you paint the wall super quick with a roller, and you're gonna create pockets of absence of the paint, which is an efficiency, really, and that inefficiency is likely to be later filled, and we are seeing it right now. The most high probability portion of that inefficiency to be filled is the consequent encroachment, which is the middle point, which we can see with the dashed line. Price can certainly fill more of that, but we're not going to be demanding that. We're just reading price. In fact, let's look at the levels on the mean threshold. Sorry, on the on the order block, the daily order block, which basically means if this was our draw on liquidity starting from Monday, August 12th, the bottom of the order block is the most likely spot. Then we have 25% of that inefficiency of that PD array, price, a premium discount array. And then the middle point, the mean threshold, is basically 50% level, which is also likely, which we just now reached. The next thing that I would likely aim for on the daily would probably be the 75%. But it all comes in terms of first need to navigate through this hourly inefficiency. So far, so good. Just had a technical issue come up. Probably gonna scale down the resolution. Hmm. The stream might drop for a second. Let's see. I think it should be good. And of course, we're not trying to chase price. This is the worst thing you can do, because the moment you're going to start chasing price, you're basically playing a mental game that you cannot go on and win in the long term, because you're going to be off balance when you're doing that. Um, and the moment that price is going to do any sort of wiggle in the direction of your stop loss, that's going to send you into a spiral, and you should just not do that. That's in fact probably the sole goal of how price is being delivered, because that exactly um, engineers liquidity. So actually, let's look at a higher time frame. All of this move higher is likely to invoke feeling of FOMO from retail-minded traders, and they would feel strongly obligated by themselves to start following price. So we'll see how that turns out to be later on when um, when price is going to perhaps do a move against all of this and towards the imbalance that we have here. Let's see what we have forming here. We have very small relative equal lows right here that are being formed, and price just keeps pushing and pushing higher. So we wait. Okay, well, it just keeps going higher. Now it has filled the hourly imbalance. Um, let's see what happens now. We have these relative equal lows right here. Let's take that and put it over there. And it's 852. Recall me saying that there's a volume imbalance right here. It's very tiny, but it's there right here. We can see the gap between the two bodies of the candles. That is essentially a volume imbalance, and that's why we include them. So price went right to it, and now we'll see what happens. Knock on wood, but I think the quality of the stream so far is acceptable because I remember when I recorded a video on a Sunday and after like 20 minutes it was painful to watch. Like the video was very jittery and yeah, and and my laptop was overheating. So now we're coming up on 9 a.m. opening, sorry, not opening range, 9 a.m. pre-market range. And again, so if we divide an hour, so 7 a.m., 8 a.m., and 9 a.m., the first 30 minutes of the hour from the top of the hour, so from 7 to 7:30, from 8 to 8:30, and 9 to 9:30 is pre-market range. And during that time, if we have our eyes on a likely draw on liquidity, like by that I mean like short-term draw on liquidity. So let's say here, for example, um, if for whatever reason I have my eyes on this relative equal lows, and I think this is the short-term draw on liquidity, and I'm working with that trade idea, and by that I mean there's going to be more factors that build up on it. This is not enough for me just sell short right now. So given that expectation, I would anticipate in the first 30 minutes of uh, 9 o'clock, like 9 a.m. So as soon as 9 a.m. happens, what I would expect is to see the opposite move. So the direction would be opposite of the relative equal lows. Instead, price would be going higher. That effectively will be our manipulation. Um, so this is like a fake rally against the real drawn liquidity, which helps first um, entrap the traders that will be buying long. So if it goes higher above the swing high, this is what's going to set off people to purchase more and buy in on that run, which consecutively gives a chance to smart money to pair their short orders. So meaning if there's a buyer in the marketplace, like a retail trader or like an uninformed individual, that buying allows the smart money to concurrently sell because they, for example, they would know that price is actually likely to um, go down. And secondly, while all of that happens on the upside, as price moves higher, those that are, let's say, feeling FOMO and they are going to be buying, they're likely to be setting their sell stops below these relative equal lows. And thus the market sort of goes through this process of both entrapping traders and generating liquidity at the same time. Notice how we've reached the top of this hourly imbalance, hourly CB. I'm actually going to denote that. Sell side imbalance, buy side inefficiency. This is what it means. So we've reached the top of this. What I find tend to happen with higher time frame imbalances like that is sometimes price upon reaching the top of that imbalance is likely to find itself moving lower and and then creating that range bound um, inside of that imbalance. But we'll see what happens today. I like seeing the likely formation of relative equal highs on 1 minute. We have this swing high, then a smaller swing high, and now once this candle closes, we're going to have another swing high. So that's also something I'm looking at. What I'm seeing here is that upon closing of this candle at 8:45, so basically at 9 a.m., we have this formed, and that completes a 15-minute imbalance we have right here, the high of this candle and the low of this candle, right there. In terms of what it means, price could retrace into it. Um, so it could be a retracement just to here, to this area. It could be to the consequent encroachment. It could altogether overshoot it and go lower. I'm not building that idea right now. I'm just noticing the inefficiency and that exists on 15 minutes. And remember that um, although we marked this inefficiency first, meaning at 8:32, it was already created. The fact that we have a 15-minute inefficiency in the same area after, well, naturally, technically, if we were talking about time continuum, you'd think that the 15-minute inefficiency formed later than this one, but you need to be looking at it through the perspective and the lens of um, hierarchical time frames. So 15-minute chart is always a parent chart to 1 minute. So thus we should take and put more weight to a higher time frame because that's what always comes first. That is if you want to, let's say you have an idea that, yeah, certainly this imbalance is going to be tagged or, I don't know, repriced somehow, then you can refine it to the point of inside of that imbalance of 15-minute chart, we have a 1 minute imbalance that price is likely to engage. I'm just basically explaining the idea. I like what it's doing here. It's consolidating, and whenever it's consolidating, price is effectively building liquidity on either side of the market. Now, I feel more inclined to believe that it's going to be setting up for a short, for like a nice sell-off. Perhaps sell-off back into the consequent encroachment of this hourly imbalance, or maybe even here. But as I said, now that we have this high and this high right here, this is quite relatively equal. And I would want to see price sweep these highs during the first 30 minutes of 9 to 9:30, and then provide some sort of reason for it to one come down hard, maybe to the relative equal lows. Excuse me. Just remember this is consequent encroachment. So far, so good. Remember, we're not trying to force any ideas on the market, and we're not trying to anticipate any ideas before they happen. I'm laying them out because that's how I consider possibilities, even though sometimes I go into this mode of running in front of the train, which ultimately leads to my demise. But yeah, there's definitely a golden middle. Right now, it's setting up for something. I don't know what it is setting up for. There's certainly theories, but all that is said for is to wait. We gotta wait for more info. We've got to wait for more info. So we have, for example, relative equal lows right here, these little ones. And if price takes these out first, then it could go higher for these ones because we also have relative equal highs right there. And that would kind of fit as a puzzle piece into the bigger context, into the bigger framework of me thinking, hey, it's going to go higher in the during the bell opening bell, that is 9:30 a.m. And then we'll see again. Now here we have an imbalance right there, this big gap, and right before it is a down close candle, which I'd consider an order block because right before, right after, well, technically right after that candle, we have a large impulsive move higher. So then this would be considered an order block, but we'll see. Order block, a high probability order block requires context and narrative to be on your side because I don't really quite see the narrative around this order block besides the fact that potentially price would sweep these relative equal lows, tap this order block, and then go higher for the high of the day at 8:51, and then these relative equal highs. That's all I got on that order block. So far, I like how it's respecting the mean threshold of that order block. That is, again, the half point, the midpoint of this candle body. If this green candle closes like that, we'll drop into 15-second chart and see what happened there. And let's mark these relative equal highs out like that. and then this buy side liquidity, because this is all potential. So what we've got here, we don't have any imbalances. Well, the only one, yeah, I wouldn't say we have any imbalances. Again, there's this order block, which is fractal. So ideally, yeah, I could take that as an order block. So now what we're going to be looking for is how price climbs up from here. I want to see some displacement above this swing high. This swing high, because this is the swing high that we had prior to price digging into this order block, mean threshold, and running out the relative equal lows. If we get a displacement to the upside, I would feel more likely, I would feel more confident in the likelihood that price is actually going to run higher. I want to see an imbalance for, and currently it's flickering out, to be honest. It could just be a slow grinding move against all of these. Let's note this thing right here, because this is technically a SIBI, but now that price had moved above it and closed above it, it turns into an inversion fair value gap. So if price was to come back down to here, I'd want it to tap that, maybe as far as the consequent encroachment, because this was very muddy, and I don't really see any other fair value gaps or any other premium discount arrays that stand out personally to me. You might not be like that. You might, for example, see breakers and mitigation blocks and all sorts of other things. I just personally haven't, first of all, spent the time to learn the mitigation blocks, and really, on the other hand, haven't really fallen in that relationship with seeing breakers and mitigation blocks and propulsion blocks and all of that, because that's what you got to do, is you got to find your personal favorites or something that jumps out in your face when you're looking at price. We see how price just wicked down into this inversion fair value gap. Let's see if it will continue. I don't want the bodies to close below the inversion fair value gap. Mm, it's probably likely to go lower. The way it painted out, like outside of the box, doesn't give me any confidence in this move. So let's just go back up. Now think of it that way. If I was to be correct in identifying the price moving higher as a fake rally to then go lower, we're effectively seeing an opposite of that. So instead of the first 30 minutes taking care of the buy side as a fake rally, price is moving to the to the sell side liquidity and engineering buy side. So I'd say this is like a 180 of what I expected, or let's say 180 of what I wanted to see if my trade idea was to take a short, aiming at these relative equal lows or further. Now, because this price move is coming down, I want to see these as targets going forward. We'll see how the 9:30 a.m. equities open, because that's going to give us a lot of feedback in terms of market and move. Notice, however, the mean threshold of the order block has still not been traded below. It just shows how I don't feel super on point today with regards to price. It's just a little muddy because two taps is okay. It can lead to rallies from then, but for me personally, I find best stuff happens when all of these like algorithmic price signatures, they're very well. I don't want to derive too much of a general statement, but black or white. Like, for example, very clean. So if you had a fair value gap, which you were, let's say, which was your entry, and price comes down into it, wicks it, or maybe closes inside of it, or closes just above the consequent encroachment of it, or maybe closes right at the bottom of it, but still respects the borders, and then quickly, very rapidly moves away from it. That is a much better situation than, for example, having price come down into it once, then create a lackluster type of reaction from it, and then second time it comes down into it and then moves again further away from it. Certainly it could produce a rally, but the confidence that you have in the first scenario is just nothing compared to like it's so much different than you having you seeing that double tap return into the fair value gap. That doesn't drive confidence to me personally. And being able to pick up on these things, I find, is a sign of you being able to follow narrative, because narrative is driven in the market literally based on how the candles paint, and is the hardest thing to learn. I'm not saying I've learned it. I'm just saying that it's a very um, broad subject. It has a lot of factors um, driving that learning curve. just for interest, I want to know where this fair value gap starts. Technically, it starts at this volume imbalance. So let's just do very simple. Yeah, so this is where the 15-minute fair value gap starts. And notice how the relative equal lows on 1 minute are right below it. I guess let's mark it out so we know what this is. Let's just do it on here. All right. What's going on 5 minutes? Yep, okay. Very, very tight range. What about 15? Also quite restricted, don't you think? It's waiting. Wouldn't that drive a really nice resistance picture for retail traders thinking it stopped? And if it was to move lower at 9:30 into this 15-minute bullish fair value gap, BC, and sweep these relative equal lows, that would engineer a lot of buy-side liquidity above the relative equal highs in the top of day. I guess I'll write that high of day. As in so far. because it has been the high of the day so far. Now we have these relative equal lows. 2 minutes away from equities open, when the volatility is gonna come into the market. Watch what's happening. Let's see. So you remember how I was looking for an imbalance? We had another run lower right here. Then we had a move above a short-term high right there. And then we have this fair value gap being formed right here. Yes, let's just do green. And then price eventually started running higher and higher and higher. This is a really nice, sorry about that. This is a really nice order block right there, because there's an imbalance right there, if you can see it. And yeah, now price is moving towards the relative equal highs, and perhaps even the high of day. That would be really nice to see at 9:30. So now, with that in mind, let's see what happens. So equities open, taps this fair value gap. We're very close to this high of day. I want to see it move higher, because that would be our manipulation leg at this point. And after that, I would be inclined to look for shorts, because we have all of this right here. Let's just mark that out. All of this right here, relative equal lows right there. And we have the 15-minute BSC and more relative equal lows here. And also the consequent encroachment of this hourly imbalance. Oh, actually, this should be on 15 seconds only. Excuse me. Notice how it filled this fair value gap. So, because we're so close to this said target, The fact that it filled this gap would be generally unwanted, but I guess because it is an equities open, there's a lot of volatility. Plus, it falls in line with this higher time frame hourly imbalance. I can see how that would be acceptable. Well, let's continue reading price, seeing what's going to happen next. Now that we've run the high of day out, we can see price is starting to taper off. What I want to see is displacement. We see it on 15 seconds. What I like on this 15-second chart is that we have this fair value gap which turned inverse. So it's basically a bearish inversion fair value gap. Then we have this breaker, and that the reason because this this BISI was basically overlapping this breaker, I would want it to act as an inversion fair value gap. We have this huge imbalance that price is currently working inside of. We've taken out this swing low, created a shift in market structure. Notice how price closed basically on the same level. Well, closed below it. Now let's see how this consequent encroachment fares. Right on it and then through it. I want to see displacement. I want to see algorithmic, impossible to argue displacement lower if I was to short. And so far, there's nothing like that. And it just closed outside of it, so I don't feel it. Now, if on 1 minute we see this swing low being displaced, all more reasons for a short. All right. Had to let the cat out of the bag. Haha. So, what are we at? Where are we at? We're almost reaching the 75% portion of the daily order block. We are trading outside and above this hourly imbalance. We've taken another consecutive high. So far, there's no displacement to the downside. Yeah, it could be that there's nothing in it for us today because I don't feel comfortable going long since it's been going higher and higher and higher, basically since 8 a.m. It's already reached out to 230 handles. We're just going to keep monitoring it and seeing what occurs. Now, do I think that we're going to reach the top of that order block? So the very top? And eventually maybe even the buy side liquidity above the old daily swing high? Today? I don't know that. Um, I don't think so because today's Thursday and it would be really nice for price to leave it for a Friday type of run. Um, it is CPI week. We had CPI on Wednesday, and basically CPI was all like that. I think it was just all bullish, just non-stop until maybe PM session when we entered consolidation, and then um, oh, actually no, this was Tuesday. That was all bullish. That was PPI, but then CPI we had a very, I'd say, well, in the context of the daily chart, it was very flatish day. But on intraday chart, we could see it was quite seek and destroy-ish. Like it went one direction, then bottom, then up again, then bottom again. And today we started a rally, which technically, if this was all considered consolidation, consolidations tend to usually set up for another move that was likewise to the previous one, and we could see that today as well. So we could just see an explosive move just keep going higher. But I'm not here to guess. I am here to read price and see what it does, and from there onward we make decisions. Let's see how this 15-minute candle closes. because the very last candle just got outside of the hourly imbalance. Just give me a second. All right. Let's see what happens. My forces are dwindling. That I can tell you for sure. So let's think about it. We had just these relative equal highs right there, these two um, swing highs. Second one consecutively smaller, or I guess lower than the first one. That's a high probability relative equal high right there. we have this 75% daily, 75% off the daily bearish order block level, which I think is important. We've had this huge rally since 8:30 a.m. based on the news that occurred, and that was it doesn't really matter what news there was as long as you can identify that it's red folder or orange folder or yellow folder. And when I say that, it means high impact news drivers, medium impact news drivers, and low impact news drivers. And usually the volatility gets invited into the market on high impact news drivers and low and medium impact news drivers. So that's the orange and sorry, the red and orange correspondingly. Um, and think of this as all of this price has been going up. It's inevitable there will be people and individuals who would be longing during this high impact news driver release, after, before, and if they got lucky, maybe they weren't taken out. All of these guys, they would want to roll their stops because the greed would push them to capture something. And they are likely to move their stops to levels that are taught in retail traders' Bibles, like resistance. So, sorry, support. So, in this scenario specifically, levels of support are levels like these, relative equal lows. We don't dub them as support or resistance because we always know they get broken. You just need to know the context. So, in this scenario, we have a quote unquote support here, and we can even say we have support there. There's probably going to be liquidity being moved up to these swing lows. I'm just waiting for the moment when price is going to break lower, if price goes break lower. Otherwise, we don't have a trade, and that's fine. Sometimes there will be days when you have an idea and it doesn't, let's say, it doesn't um, materialize, and whether it didn't materialize because the market never really did what you expected it to do and what you wanted it to see it do, or maybe it didn't pan out because you thought it's there, you took a trade, and it didn't pan out, you got a loss, or maybe you squeezed out a break even. Regardless, it there will be days like that, and it's fine. You just gotta find your model which presents a consistent edge. And basically, it's just basically all it is to say is that it has a higher probability of working out than not. And you gotta know the environment in which it works out and in which it doesn't. And all you have to do is chase the follow the environments and put yourself in environments where that model excels. You do not want to force your edge in environments where it doesn't work. So, for example, um, if my model is highly leaning towards reversal patterns, which I've been I've been waiting to see something like that, but it just doesn't give it to me. So the worst thing to do is force the model here, because as you can see, I don't see any reversal coming up anytime soon. Um, we're just pressing higher and higher and higher. So your model may be continuation, and maybe you would be excelling in this right now. And even reversal, like when I was talking about reversal next to this order block, mean threshold, right there, I didn't even like how it came down into this mean threshold twice. Certainly after it came down and it went up, there was displacement above short-term high, and there was a market structure shift and a fair value gap. Regardless, it just didn't seem like a clean enough setup for me, for my liking, and that's completely fine. Let's see where it's going. Is it truly capable of reaching this today? So what we've got here as well is daily buy-side liquidity. Let's just mark that out. And this is of course the top. I sense that today's PM session might be fruitful, but again, I'm not going to change my model and change my approach to, let's say, um, fit the, well, really to chase anything of any sort. You should not chase anything in this career because that's when you're losing your balance again. Find me talk about balance one more time. Let's take an intermission for 4 minutes. I'll be back in 4 minutes and we'll just see where it keeps going. Let me just set it up so. All right. I'll be back in 4 minutes. Okay, we're back. Ooh, okay. So, this displacement below a short-term low, right there, and having created this fair value gap, I would anticipate these levels here to be targeted. It is 10:06 a.m. New York time. But because let's see what's happening on here. We now have these relative equal lows being generated. Let's see if price wants to come up into the consequent encroachment of this gap. Because now it's 10 o'clock. The next 30 minutes, I would like to see price sort of move against these relative equal lows. And this would be our form of manipulation. Just now, it has created these lows as a matter of, well, the target. Likewise, on 15-second chart, we have these levels here, which I'd say are precisely the ones we want to see being run out first prior to the relative equal lows being taken out. If I was to rate this setup, I wouldn't rate it high on my list personally, because I just don't like how price has been climbing and climbing and climbing, and now it just dropped lower with strong displacement for sure. But I wouldn't sell it right here. Wouldn't sell it right here on there, targeting this, because that would already be catching me off guard. I would have been already at a loss. Technically, if you were to sell here, like aiming for low, your sell stop should be here, but I would prefer to refine it a little more. So we see the relative equal lows being, sorry, relative equal highs being taken out. Again, price is going up. Engineering sell side liquidity below these relative equal lows. I'd allow price to go up as high as this imbalance here, because this imbalance sits right at, or right above, equilibrium of this range that we had defined here. This is a breaker. This down close candle, the last down close candle before the range up for the stop hunt. This is where the stop hunt occurred. So then this would be the lowest candle in the range down would be our bearish breaker right there. And let's just leave it at that for now. And yep, it's a halfway point. So after this displacement lower, price has recouped the premium. So if we were to sell, we would want to sell at premium prices, not at discount, because that's what smart money does. But still, I'm not seeing anything that I like yet. It's very, very not like my style. Or at least, I mean, I used to take these trades, but I find now, looking back, um, they definitely had a sense of FOMO behind them. Because you see this displacement lower, and you just think, wow, if my idea about going short is truly right, and if I was to sell here, I can make a lot of money. But this just goes, it could go anyway, really, until we get more info. Like, for example, this, the way that this broke lower, just like that, it would be a nice way to sell. So, let's see. Selling right here, like that, and then set the stop here, buy stop, and then set a, well, let's just do 3950. Six, 4275. Trade buy limit 4275 at relative equal lows. Okay, and now we just let go of control over the marketplace. The idea is that it has reached premium, then it had algorithmically broken down. Like, we can see the displacement. It has taken out the swing low, right there. It has not really painted outside of that box at all. We have had engineered the sell side liquidity right here below the relative equal lows. I don't want it to close above these highs. I wanted to maybe wick it and go down, but regardless, we've taken a decision. We stick with it until either scenario comes to fruition. And there we go. That's all right, because this was a controlled environment. We have let's see. Looking back at it, we basically had these relative equal highs right there, which price just took, where my sell stop was, or I guess, sorry, buy stop. Let's see. Now let's read until the end of this, probably until 10:30, I'd say, and that should be probably enough for the first stream. If this 1 minute candle closes above that fair value gap, the red one, then it's likely to just continue higher. So then all of this, as I mentioned earlier, was driven by FOMO because this was a manipulation leg. And if this was a manipulation leg, then it was probably setting up for a run higher into the high of the daily order block. Hmm. You know what I'm thinking about is the fact that this level has remained smooth, which then was followed by this displacement lower. That doesn't mean that there was a stop hunt sufficient enough to consider this an entry short. Meaning, this is still smooth, so there's still liquidity above here. Hmm. Perhaps. So it's important, I'm thinking about it right now, is that this is a good learning opportunity because I ought not to seek validation in terms of finding out what this move actually was about. Because the reason I'm thinking that is because I'm here standing looking at price and I want to see what it does. And if I see that in fact it goes, let's say, I don't know, it falls out of bed and goes towards the relative equal lows that I pointed out earlier that I thought were the target, I would feel validated in that. That's not what I should be looking for. Um, because really it's a validation outside of you, which you ought not to chase. You should not go after that. You need to be validated within you. So this brings me to my next contemplative point, is that I think it has been said today by me, saying that if you find that this environment in price doesn't seem to fit your personality, for example, if I am heavily leaning towards reversal patterns, and we have a day like this where price has just been going up and up and up and up, and the moment that it breaks lower with displacement, note that it hasn't broken lower with displacement after reaching one of the relative equal highs that I've pointed out, that I've talked about earlier on, between 8 and 9 a.m., when I was saying we need to have a relative equal high that gets traded above, which is diametrically opposed of the relative equal low that we anticipated to be the target in the first 30 minutes of the top of the hour. Then we have something on our hands. Here we had a pure displacement lower before taking any specific high out. So really, I think it was not sufficient to call any sort of um, instigation on a model. So yeah, I think that's something I need to take away personally. Now here, this is a short-term high, and this is a short-term high, even though its price is trading up above it right now. But we have this three candle pattern where the left candle is lower than the middle candle high, and the right candle high is lower than the middle candle high. So this is a short-term high. This is a short-term high. These two short-term highs, they create a relative equal high. If I was aiming at these relative equal lows and I saw these relative equal highs traded above, that adds to the possibility of price going lower. But it is not enough to single-handedly call it a short. We're not, like, that's not sufficient info. When will it become sufficient info? If we see within the next minute or two price completely drop and leave behind a large inefficiency, then we proceed to the next point. We're waiting to see if that inefficiency stays open. I think I might actually stream from 9 a.m. New York time to 11. It's probably going to be better with my schedule. We'll see. We'll play around with that. We'll see what fits better. For now, it's all a test environment, all a trial and error. Regardless, I think, yeah, I think price is not really in a rush anywhere right now, and I'm not really feeling it. So I think it's time to call it. Meanwhile, I guess after the stream, I'll take some notes on this. Record it in my journal, save it, and then this would be something I will go over on, like, say, Sunday, on the weekend, when I make my video for the reflection. And this time I won't actually go on live charts, I'll just have screenshots, and I'll go through screenshots and talk about it, so it'll be a little more, in a more digestible manner than me just going over all of the charts that I have and kind of speaking on it. And I'll have some notes prepared for that. In my free time, I'll go over and think about it. Yeah, other than that, it's been a good day. I'm glad that I followed my risk parameters. And it could be just a little too early. Just a little bit emotional, that action. But I'm going to be working on removing that to nil and following a rule-based idea and not forcing trade ideas on the market, but just waiting until they actually materialize. I think this is a good point to leave it off. Thank you so much for, I guess, for being here, if you're here. Yeah, see you tomorrow. This was a test run. Everything seems to work fine, technologically speaking. And yeah, I'll do one tomorrow.